Thank you very much for coming to talk to me. It's great to have you on the new programme. I want to start off with mortgages. How worried are you about mortgage rates?
Yeah, morning, Sophie.
Hello.
I am concerned. We've seen a really rapid ramping up, haven't we, over the last 12 months, with the Bank of England's bank rate having gone up, over 5 percentage points. And the lion's share of that hasn't yet hit people's bank accounts. That's coming through the second half of next year into the first part of next year.
It's interesting about the lag, isn't it? Do you think people really understand what's about to come?
Well, I don't think it's fully factored that in yet. I think the media's done a good job, I would say, of alerting people to what's coming down the pipe. But I think until it actually hits your bank account, until you're actually forming those hard choices, what do I cut to make good on the extra mortgage payment? I think we haven't seen the full consequences remotely of that in people's spending patterns.
And what do you think the full consequences will be then?
Well, it'll be a squeeze. So we've got sort of two forces swaying the economy over the next 6 to 12 months. One of which, a positive one, a tailwind if you like, will be falls in inflation. That process has begun. On the other side though, Sophie, the headwind, the big headwind, is as the cost of living is falling, the cost of borrowing will be rising, and that will squeeze spending in the opposite direction. I'd hoped, last time we spoke, I'd hoped for a recovery in the second half of the year due to the tailwind. I fear the headwind of mortgage rates will trip that up and halt any recovery in its tracks.
And by halting a recovery, what do you mean by that in layman's terms?
Well, I mean, the economy's been pancake-like, flatlining for 18 months, even with the revisions, big revisions to the data last week. But the story of the last 18 months remains intact. That is to say, we have been stuck. Growth is absent. That means it would take only the tiniest of tilt for us to enter recessionary territory.
So that's still a danger, you think, then?
It's definitely still a danger. I would hope not a sharp recession. But could that rise in the cost of borrowing take the legs from beneath an embryonic recovery? I think it could, and that is definitely a risk.
How big a risk do you think a recession is?
Well, I'd say it's an evens bet as things stand. It's by no means baked in the cake. And actually, the economy has shown surprising resilience. Households have shown surprising resilience over the last 6 to 12 months. I fear, though, that resilience has come courtesy of them drawing upon their savings. And that pool of savings is not a bottomless pit. We know that perhaps a third of households have fewer than £200 in their back pocket for a rainy day. And that doesn't come close to meeting the increased mortgage costs many will face over the next 6 to 12 months. Come the autumn, we're into the autumn now, I would hope that my former colleagues at the bank would cause for pause when it came to the cost of borrowing. And I hope when it came to the government, there is something in the second half of the year, perhaps at the time of the autumn statement, that can give a bit of a giddy up to growth by investing in both people and in casing equipment and machines and buildings in a way that provides a firmer underpin to growth into the second half and builds that confidence, Sophie.
I want to talk to you about that investment in a minute, but just to pick up on what you said about your colleagues, your former colleagues at the bank. So you're saying that if you were still, a voting member at the Bank of England, you'd say, let's stop the interest rate rises, the baseline rises. I'd
have stopped a couple of rises ago, in truth. So I think there's enough in the tank already by way of tightening.
So they've overshot, you think? Maybe?
I think there's a risk of overshooting, and I hope there's not further overshoot. Because I think there's enough tightening in the tank already to take inflation down to the sorts of levels where people stop talking about it. Wait, you stop asking me questions about it.
My first one was mortgage rates, right? Yeah.
Completely, and it has been the popular narrative now, not just between you and I, but out in the streets for the better part of 12 months.
Just on the Bank of England, Do you think in recent years the Bank of England, I know hindsight's an easy thing, but you did warn about it before as well. Do you think the Bank of England printed too much money and that has fueled inflation?
Well, I think it kept on printing money for a bit longer than it needed to. Should have done, I think, with the benefit of hindsight, although...
You did say that at the
I did
time.
say that. We probably did a little bit too much for a little too long. I make no apologies about the greater swathe of that easing. That was needed, I think, at the time of COVID to protect jobs and to protect households and to protect businesses. But did we persist with that a little longer than we needed to and step on the brakes? Did they step on the brakes a little too late and therefore a little harder now than they needed to? I think that is probably where we find ourselves, regrettably.
You said we. Would you be tempted to go back to the bank? Some people have got you pegged as future governor.
I did 32 years. That's ample. I'm really enjoying, actually, this goes to the question of, what are the biggest challenges facing the UK economy right now? And actually, they're not interest rates.
You didn't answer that question, just to say.
No, I've done my time.
Okay.
I've done my 32 years. I loved it. I loved every one of those 32 years.
Okay.
But now I think the challenges don't sit mainly with monetary policy. They sit on what sometimes called the supply side of the economy. Yeah. Structural reform. Let's
talk about that now, because you mentioned what you'd like to see the government doing. And there's been, with the crumbling concrete crisis, a sudden look at how Britain is doing in terms of our infrastructure, schools, hospitals, railways. Has there been an underfunding?
There's been underinvesting in the assets of UK PLC.
And you mean, for example, school buildings and stuff like that?
I would include schools, I would include hospital estate, I would include road and rail. Yeah. The grand sweep of physical infrastructure, and indeed digital infrastructure to an extent as well. We fare poorly when it comes to the amount we save as a country, save as a nation, and the amount we invest as a nation. And that's the main reason why we're seeing these problems, these fragilities in our infrastructure show up, whether it's crumbling schools or congested motorways and railways.
So should they have seen this coming, the government?
Well, it's not, I mean, it's a collective we. That underinvestment, long predates this government.
Should we have seen it coming?
I think it was foreseeable that if you consistently underinvest as a nation, then the quality of your what's sometimes called capital stock, the stuff we rely on for our everyday lives, the schools our kids go to, the roads that we drive on, the hospitals that we visit, unless you keep on investing in those things, it trips you up over the longer term. And we've invested too little for too long.
So what would you do then if you're in number 10?
I think now is the time for investment. And that needs to be broadly based, not just government, it needs to be businesses as well, playing their part. But often, the lead needs to come from government. And I've made the point, Sophie, that our current fiscal rules get in the way of that. They don't recognise sufficiently the difference between spending money that gets paid out today and spending money that's investing for tomorrow in the schools, in the hospitals, in the roads and the railways and the broadband. I'd much prefer, rather than us fixating on measures of debt, how much we spend, to look instead at how much we invest in those assets.
Do you think Labour gets it? Because Labour have been very cautious when it comes to investment. They obviously don't want to be pegged at the next election as going back to the sort of magic money tree days, as the Conservatives would put it. But at the same time, if you look at public services, if you look at the infrastructure, a lot of people will be saying, we do need to borrow a bit more in order to get this right.
Yeah. I think both sides of the aisle, I would say, could afford to look afresh at the fiscal rules that they've committed to ensure that they're making those investments in all the stuff we've been discussing, which we know have a payoff into the medium term. Our current rules box us in to act in a short-termist fashion, and we know that ultimately hurts growth over the medium term. So would I prefer a bit more ambition politically on the investment side, on the fiscal side? Yes, I would. I live in hope rather than expectation, Sophie, but nothing wrong with hope.
Yeah, you can keep calling for things. Your background's quite interesting. You were born on a Sunderland council estate. You became one of the first non-Oxbridge graduates to join the Bank of England's trainee scheme. You believe in levelling up. You're passionate about education. Has it shaped your perspective?
Yes, from the early, it's why I became an economist. It's why I entered public service. It's why I've remained a public servant over the period. I do see, and you see too, huge opportunity in people and in places all across the UK, opportunity that's too often being lost.
Just finally, falling house prices, good or bad thing?
Well, near term, bad for the economy, because it saps confidence, it erodes wealth, and therefore will chew up spending. But ultimately, we have in this country built far too few houses for far too long, probably for the greater part of 50 years. If we were to build a more appropriate number, one consequence of that would be certainly house prices not rising as fast as in the past relative to people's incomes. And that would be good from a long-term affordability perspective. It's a big problem among young people in this country. A mental health crisis, financial precarity, an inability to get their foot on the housing ladder. Levels of home ownership among the 30-year-olds are back to levels of a century ago.
Wow.
The only way we will fix that and problems like that is, one, by growing the incomes of young people. We've suggested how. And two, by building more houses and therefore making them less expensive. So it's part of the problem near term, but part of the solution longer term.
Thank you very much.
Thank you, Sophie.